Good evening to everyone. Now I request CA Nirav Agrawal to escort our today's panelist, CA Rohit Choksi sir, CA Gyan B. Pipara sir, CA Mahesh Chajed sir, and CA Prasant Maheswari sir on the dais. I request CA Nirav Agrawal and CA Purushottam Khandelwal sir to welcome our panelist, CA Rohit Choksi sir with memento. CA Rohit Choksi sir is a senior managing partner at GK Choksi and Company, stands as a distinguished expert in tax and business advisory, auditing and assurance service. His exceptional proficiency extends to specialized areas such as mergers and acquisitions, search-related tax issues. With over 50 years of experience, Rohit sir's unparalleled guidance has been instrumental for transitional organization and leading Indian as well as multinational enterprise across a spectrum of sectors. In addition to his professional accomplishments, Rohit sir is a respected member of Indian Council of Arbitration and serves on the panel of arbitrators. In past, he has served as a member of Executive Committee of Income Tax Appellate Tribunal Bar Association. Also, he was associated and has contributed to his expertise to the Direct Tax Committee of Gujarat Chamber of Tax and Commerce. Rohit sir is also actively engaged in charitable activities. With his extensive knowledge and experience, Rohit sir continues to be a pivotal figure in the field of tax and business advisory, providing invaluable insights and solutions to diverse areas of clients. We welcome you, sir. I request Nirav Agrawal and CA Purushottam Khandelwal sir to felicitate Gyan B. Pipara sir. CA Gyan B. Pipara sir is having a brilliant academic career with first rank in university and 40 years of successful professional career as a chartered accountant. He is practicing chartered accountant and founder of Messrs. Pipara & Co. LLP, having offices in Ahmedabad, Mumbai, Delhi and New York with a family of 300 plus members. He has been on the board of directors of State Bank of Saurashtra and State Bank of Travancore as a Government of India nominated independent director. He has written 2 books, Balance Sheet Decoded and Forensic Audit Decoded, both published by Taxman. Apart from his practicing CA and published author, he is regularly imparting training to the officers of MCA, students of ICAI Academy, bankers, independent directors, government officers, CAs, teachers, and various other forums. He has also been awarded Silver Shield ICAI International Research Award 2020 in January 21 for second best research paper in auditing category. We welcome you, sir. I request CA Nirav Agrawal and Purushottam Khandelwal sir to felicitate Mahesh Chajed sir with a memento. CA Mahesh Chajed sir is a founding and managing partner of MS Chajed & Co. Mr. Mahesh Chajed is a fellow member of the Institute of Chartered Accountants of India and also holds Bachelor in Law. With 3 decades of experience and focused exposure, he is well known for his competence and innovation in the field of direct taxation. He presently focuses on merger and acquisition practice of the firm while providing technical leadership to the international tax, transfer pricing, direct tax practice of the firm. He has successfully handled several cases of merger and acquisition, joint venture, and restructuring, including domestic and cross-border transactions. He is active in professional organization and contributes in various NGOs, associations, and trusts. He is a regular contributor to various newspapers and has addressed various seminars on contemporary tax and legal matters. We welcome you, sir. We have amongst us CA Prasant Maheswari, sir. I request CA Nirav Agrawal and CA Vikas Jain sir to felicitate our faculty with the memento. CA Prasant Maheswari is a partner with E&Y LLP, tax regulator and transfer pricing practice. He is a qualified chartered accountant, company secretary, and a law graduate, having more than 18 years of experience in advising clients on various corporate tax, transfer pricing litigation, and international tax matters. His functional expertise includes transfer pricing and corporate tax compliance. He brings on board rich industry experience and understanding varied and complicated tax issues dealt by large multinational corporations. He has a very rich experience in representing various Indian and international clients for complex income tax, international tax, and transfer pricing litigation matters from the stage of assessment to High Court. He has extensive experience in advance pricing agreement, transfer pricing advisory, business restructuring, and transfer pricing litigation of various ITES and pharma companies. He has worked with top-tier multinational companies operating in the pharmaceutical, technological, retail, auto ancillary industries. We welcome you, sir.
Hello. Thank you, Janice bhai, for the wonderful interaction. I am really overwhelmed to share the dais with such an stalwarts and such an So it's indeed my pleasure and privilege to share the dais with such stalwarts of the profession, seniors to whom we have seen and grown as a chartered accountant. Sir, still we are learning a lot from your passion, dedication, after achieving so much in the profession. Still your dedications towards the fraternity and your work, which you are doing, all four of you, it's really learning for all the chartered accountants. So begin with this panel discussion. My first question would be to the Gyan sir. Sir, I would like to ask you, as we have written a book on forensic audit decoded, and since you have conducted large number of forensic audit and investigation on behalf of various regulators, in the forensic accounting investigation, what is the importance of tax audit report, and as a practicing chartered accountant, what are the relevant details which normally looked by the regulator so that the chartered accountant who is signing tax audit report is aware about such details?
Okay. Good evening, friends. At the outset, I'm really thankful for the organizer for allowing me an opportunity to share my views and thoughts. Thank you, organization, Nirav, Purushottam ji, and so many dignitaries sitting here. So friends, the very good questions, because let me divide this issue into two parts. Part one is, what is the relevance or importance of the tax audit report, particularly from investigation point of view. As we all know that till now, tax audit report was limited only for the purpose of computing the taxable income, and we all chartered accountants thought that this report is relevant only for the purpose of income tax authorities. But lately, when NPA has started increasing in the bank, large accounts turns into NPA, where regulators, lenders, Reserve Bank of India, all looking into the diversion of the funds or siphoning of the funds. So realizing that certain informations may not be available in the audited financial statement, and therefore the tax audit report is one of the tools which is being looked by the regulators. So friends, my advice to all young chartered accountants, young and senior chartered accountants, that when you issue the tax audit report, don't think that it is only for the purpose of computation of income, and so as to you are answerable only to income tax authorities. No, because if you look into the details as provided in the tax audit report, particularly form number 3CD, it's all statement of fact. You are not expressing an opinion. So be it books of accounts, be it method of accounting, be it change in method of accounting, be it nature of business carried out by the company, be it the quantitative details, very relevant and important. So in all investigation, be it CBI, ED, SFIO, regulators, we forensic auditor, rely upon the tax audit report to look into all these details, and moment any discrepancy is found between the books of accounts and as reported in the tax audit report, regulators started calling tax auditor and recording their statement that on what basis you have provided this information. Because in all loan proposals nowadays, lenders have started looking into the various information provided in the tax audit report, particularly Nirav. As you know, that after the amendment in revised Schedule 6 to the Companies Act, as you all know, that earlier we chartered accountants used to provide complete quantitative details as a part of notes to audited financial statement. But when the revised Schedule 6 came into place and now we have Schedule 3, which give us the format for preparation of the financial statement, which does not have the details relevant to the quantitative details. So if a person looking into the financial health of a company, he looks into the tax audit report, particularly with respect to quantitative details, what is the opening stock, closing stock, production, manufacturing, etc., etc. So nowadays, it has become a tool, an important piece of information. Moment discrepancy is found, the tax auditor is answerable, and the relevant information is particularly, I will say, about the quantitative details, about the books of accounts. Because when the CBI is conducting inquiry or SFIO, they will look into which are the books as mentioned in the tax audit report. And some of the books are not found, and we mentioned that these books was there. The tax auditor will be held responsible for giving wrong particulars of details. Thank you.
Thank you so much, sir. And yesterday when President sir was here with us, he also emphasized a lot on the importance of tax audit report and signing. That he also mentioned that signing of tax audit report is a very serious business, and also laid before the members the very practical examples which he is being brought forward towards before him in case of disciplinary actions. So yes, sir.
Because we know large number of cases where the tax auditor has been made as a party in the criminal complaint filed on the basis of wrong information provided in the tax audit report, and that information has been used by the lenders for reducing the limits, etc. So you rightly said.
And sir, as you mentioned that even departments are calling information from the chartered accountant about what they mentioned the figures. So I would like to come to the Prashant Maheshwari sir. Sir, what is your experience with the department, and what according to you are the common challenges that are faced by the taxpayers during the assessment proceedings, and how to overcome them?
First of all, thank you Nirav and thank you ICAI for giving me this opportunity and sharing this stage with such a learned panel. And thank you all my dear colleagues for being here, and Purushottam Bhai and entire ICAI panel for giving this opportunity. Nirav, I think what Gyan sir has mentioned is a very pertinent point, that how the tax audit report plays a very important role in the assessment proceedings nowadays. And I think if I just try to extend your question in terms of the assessment, where now majority of the assessments, except if we keep aside some central circle cases and some transfer pricing cases, majority of the assessments will be happening, are happening in the case of in faceless manner, where the kind of questioning, the kind of reasoning what we are asked in this kind of a scenario, and the time limits which we get from the tax officers is really very shrinked. One important change, I would say this is a bit of a positive change what I have observed recently and after the faceless scheme got implemented. Earlier, when we used to receive the show cause notice, it was bit certain that you are going to face that kind of an adjustment in the assessment order. I have seen that kind of a maturity evolving in the tax officers, that even after you receiving a show cause notice, if you submit a proper response and if that kind of a justification is shared with the tax officer, I have seen they are not bringing those kind of adjustments in the final assessment orders. Over and above, I think the one most important thing which remains nowadays is that once you get the half an hour window with the tax officer for a small hearing, the officers are very well read about your file. When you're talking to them on a particular issue, they will be knowing what kind of submissions you have given on which particular date, and once there are some discrepancies, what clarifications you have made. So I see that kind of a maturity has evolved, and that thing has changed for good. Definitely as a tax professional, for us it is very convenient now, we don't have to travel a lot. So that gives us that kind of a convenience. Some important things what I observe now, I don't know whether the officers are really scanning the entire tax audit reports, financial statements, entire computation of income very thoroughly, because the kind of questions which we receive nowadays are very, very customized. Each and every taxpayer gets a really, this is the amount of expense you are incurring in this particular year, this expense was so and so in the earlier year, why there is a significant increase in the particular expenditure. So the questions are really customized, and the time limit which is provided is really not very much available with the taxpayer. So I think that preparation for those kind of things and that kind of a requirement has to be there from the taxpayers. As a taxpayers, I think we have to be ready with for the assessment right from that stage when we are preparing our tax returns, when we are preparing our tax audits.
Thank you, Prashantji. The second most feared thing in income tax after the assessment is the search. So let me come to the Rohit Choksi, sir. Sir, can the search party, that is Revenue and Department, bring documents with them and confront the SSC in case of search? Because what happens कि वो आएंगे और जो मिलेगा वो तो बात अलग है, but वो अपने साथ ही कुछ documents लेके आ सकते हैं क्या?
Thank you all. Good afternoon. The basic question which has been put, that whether search party can bring material which is not there in the search premises from outside, from external sources. Now, search is day in and day out conducted, and these are the issues which are being taken up in the assessment proceedings, in the search proceedings. In fact, when we see and when we go through the judgment of Ravi Badalia, 158 Taxman 373, they have held that search party cannot bring such external material to the search premises. Okay, that is right. But the most important thing is that when the material is available with the search party, how can it be used? That is the next question that we have to reply. The most important thing is that the material has to be in the premises. Taxpayers Charter says that the SSC can verify, check the party when they are entering into the premises. No incriminating material should be brought by them. This is a primary condition. And when this is the primary condition, then no material, no document can be implanted in the search premises. In most of the present cases of the search, it is so happening that the search material which is already with the search party, which has been found from the third party's searches prior to this search, is their basis of satisfaction. And when this is the basis of satisfaction, they generally want to confront this document to the searched SSC. Now, what is the way out? 132.4 says that, section 132.4 is very, very clear that questions can be put only for the document or valuable or thing which is found in the possession and or control of the SSC. Thereafter, in 1989, there is an amendment, and that amendment brings very clear note that any questions with relating to the investigation can be put, but that explanation will not help the search party to bring that document to the premises. So then what is the way out? And what are the consequences of it? Then search party can resort to the section 131. The provisions of 131 are there, so they have to bring that document, they have to allow the witnesses to check it, and 131 summons, they can take a statement on it. So it is a different proceedings. 132 is a matter of criminal civil procedure code. 131 is a matter of civil procedure code. That is a fundamental difference. Even 132.4 is a statement which is more onerous on the part of this SSC, because everything which is found in his possession is deemed to be under section 292B, is deemed to be and presumed to be a correct, and it is belonging to him. Whereas this document which is brought from external sources cannot be considered as belonging to it. And so the burden on the department to prove that is pertaining to or belonging to is more with that respect. So this judgment of Ravi Badalia is on a different footing. It is with regard to the assessment proceedings. And in the assessment proceedings, the document which was brought at the time of the search was relied upon. There the tribunal said that no, for the document which has been brought from the external sources, 153C proceedings should be considered, and 153A proceedings are not available. So if we consider the overall situation, we can definitely come to the conclusion that under the direct provisions of the search, the provision, the external document cannot be brought into the search premises. But at the same time, they can confront this document through the mechanism and using 131. Now, if we extend this, then also the deeming provision of 148 to this extent has to be interpreted accordingly. So, because this document will not be treated as having been found from the possession of the search party, and therefore deeming section will be applicable differently, and accordingly it has to be interpreted in that way. So there are far more consequences rather than simple thing that they cannot bring. Only thing that this 131 section is definitely allowing them to confront. That's all.
Thank you so much, sir.
Shall I? Shall I?
Yes, sir.
So, Nirav, Rohit Bhai has very well explained the point, and just to add one more point for the benefit of knowledge, that when the search party comes, a Panchnama is prepared, and in a Panchnama there is a standard declaration that search party will allow you to inspect search party whether they have brought some documents and etc. So the very nicely explained by the Rohit Bhai, and there is a provision also in the Panchnama standard format that no outside document can bring search party with them at the time of search. And as you rightly said, Rohit Bhai, that deeming provision and etc. tax provision.
Young members in the House, and when we started this panel discussion, the panel discussion was about the practical aspects under Income Tax Act. So yes, sir, Rohit sir want to add something.
Today, there is no exit route so far as SSC is concerned. Before 2021, Settlement Commission was also available. In that case, therefore, there was no question of dealing with such type of technicalities. And people used to accept it and go for the payment of taxes and interest and all that. But these type of technicalities has to be weighed, which our Chajar Sahab will be weighing more on that aspect, how technicalities should be used against the department. When there is no door open to the SSC, such type of argument has to be taken and to take that to a logical end, to come to the conclusion that either document is not to be relied upon, or if it is to be relied upon, separate section will be applicable. Most importantly, now putting these questions, in most of the such cases, what is happening is that such documents are brought, are found from the employees or the third parties, or who are not even distantly related. So, and we have seen that those documents are brought over here, persuaded, and then compelled to confess. So in all these circumstances, we have to go to the depth of the thing, find out solution, and take this point at the earliest point of time during the search proceedings. That's all.
The Rohit sir said that Mahesh sir will comment on something, so I request a quick comment from Mahesh sir before going to the next question.
I endorse out of whatever the Rohit sir is spoken, but nowadays, practically what happened, they are kidnapping. I use word kidnapping. Sorry for it, but real word is kidnapping. Without any authorization, either accountant or any partner or anybody, even not staying in the same city or same town or same state, they pick up them with the help of police and bring the and I think Rohit sir is very well experienced of this case, and I have also one of the experience where lady advocate has been kidnapped. So the department is acting very aggressively, though they have good communication and good data, but they are very hard.
Thank you, Mahesh sir. Now, as we move toward the practical aspects of the Income Tax Act, so my next practical question will be to the Mahesh sir. Sir, for example, a private limited case was reopened by issuing notice under Section 148 of the Income Tax Act. The learned AO, while recording the reason in the reopening case, has mentioned that the source of cash deposit is required to be verified. The word the cash deposit, the source to be verified. So the main question is whether reopening of assessment for verification is permissible.
Thank you. Good evening, good afternoon, sir. Basically, Section 147 would applicable when the escapement of income. The AO has to determine that there is an escapement of income. Verification means he is not having no knowledge that whether there is an escapement or not. He want to conduct the inquiry. And for conducting the inquiry or verification, he cannot have a jurisdiction to reopen the assessment. And I say one practical aspect on it. In one of the cases, there was a reopening before the assessing officer as well as before the commissioner. SSE agreed, yes, I will agree to make this allowance of 10% of 10 CR. And finally, tribunal held that reopening is made for verification, so it is not valid reopening. And that case has been upheld by the High Court and Supreme Court. I cite the question Manjil Dinesh Kumar Shah versus CIT, wherein the Honorable Gujarat High Court as well as Gujarat Honorable Apex has clearly stated that no reopening can be made permissible for verification. So there must be AO should have some basic clarity that yes, income has been escaped. Thank you.
Thank you, Mahesh sir. Now, with respect to the tax audit report and financial statement, let me come back to the Gyan sir. Sir, there are many informations which are available both on audited financial statements and tax audit report. There are certain informations on both things. So, in such scenario, for the purpose of importance or for the purpose of utilities, which will prevail? Tax audit, in which scenario tax audit report will prevail over audit financial statements? Sir?
So, issue from the point of view that in a case of an investigation, we are asking that in a case of a reliability of the information for any purpose, that which information as provided in the financial statement, which tax audit report will prevail. So, as we all know that financial statements, the true and fair view, and auditor express his opinion, whereas in the tax audit, again coming to Form 3CD, other than 3CA and 3CB, which is in the case of a company, the tax auditor relying upon the company auditors who has already audited the financial statement. And if it is other than a company, naturally the tax auditor gives his opinion on the true and fair view of the financial statement. But the most important point is that reliability when it comes to about the information, certainly in 3CD, as it is a statement of facts, there is no opinion. Whatever are the actual information as available in the business is being provided by the auditor. So therefore, certainly information such as cash payment, information such as books of accounts maintained, information such as nature of business, method of accounting, change in method of accounting, and 48(2)(b), expenditure where TDS has not been deducted, these are all valuable and vital information which will certainly prevail in the tax audit report as compared to in the financial statement, for the simple reason that these informations are not available in the financial statement.
Thank you, sir. So my earlier question was to Mahesh Sajar, sir, when we said a 148 notice can be issued for the verification or for the records. So continuing on that point, my question would be to Rohit sir. Sir, can the notice under 148 be issued solely on the basis of audit objection without any application of mind?
So far as audit objection is concerned, under the new provisions, it is deemed as an information under the statutory requirement. Section 148 is very clear. So once the audit objection is considered as an information, then the next step, the AO has to see that that information which suggests any escapement of income. So once it is suggesting of escapement of income, then the next step is to go to 148AB to issue notices after conducting necessary inquiry if necessary. The most important aspect, and this question has arisen, that is in the recent judgment of Adani Power Maharashtra Limited, the Gujarat High Court has stated that the assessing officer, before accepting audit objections, should have independent application of mind and in satisfaction of his own. And therefore, they quashed the notices. They said that the issue was with regard to the allowability of the CSR expenditure. On the basis of the available, already settled law of the Gujarat High Court, they came to the conclusion that audit objection simpliciter will not help the assessing officer to go for the reopening of the notice. Reopening notice. So what is the way out? The new provision suggests that in the Adani Power Maharashtra Limited's case is basically with regard to the old provision, reasons to believe. Now, there is a very profound change, and there is a very categorical says that when there is a information, and information is audit objection, when there is an information which suggests escapement of income, then the 148A procedures have to be adopted. But then so cause has to be issued, a reply has to be obtained, and the satisfaction at that level, reasons have to be mentioned that how this audit objection is resulting into escapement of income. So this suggestion aspect, which the information has to suggest, then that suggestion has to fall with respect to escapement of income. So now this, what is that suggestion and how it is different from the reasons to believe? Most of the court has come to the conclusion that reasons to believe is imbibed in the word suggestion. Suggestion is also recommendation. Moreover, it gives thought to the mind that this can be done. But it is ultimately to be decided by the AO that this has resulted into the escapement of income. So simpliciter audit carry will not form any basis for reopening of the assessment issuance of the notice under section 148. So for this matter, it is a new law. It has to be settled. The Adani Power Maharashtra law is under the old provision, and we have to test it with respect to the interpretation of suggestion as to the escapement of income. That most of the code which has come now available is very categorical and suggests that the reasonability of, the reasons have to be very sound for reopening, and for coming to the reasons, again, the objective satisfaction of the assessing officer is necessary. In reason to believe, it was subjective satisfaction. So suggestion to escapement of the income is more onerous, more difficult, and more concrete evidence is required to prove that there is an escapement of income. Of course, this whole interpretation is yes to be treated directly with respect to the audit objection. So many more decisions are available, and considering these decisions, we can say that there has to be some reasons. In most importantly, before 22, final audit objection was mentioned in this section, and in 22 Finance Act, this final word was deleted. Why? Because audit objections can be of two types: internal revenue objection and AG audit objection. Now, earlier in 21 law, only AG audit objections was referred. But now, internal audit objection has been mentioned, AG audit objection is mentioned. And the word final has been removed. Why this is removed? Because when the audit objection is been raised, this has to pass through many stages. The assessing officer objects to it, sometimes PCIT objects to it, and then AG audit may accept it, AG audit may not accept it, internal revenue CIT audit may accept it or may not accept it. So correspondence between them goes on. So this aspect is very, very important from the point of view that when simpliciter audit objection is considered to be an information, we have to check whether assessing officer has objected to it or not. If he has basically objected to it, how can there be a satisfaction on his part for reopening? Because on one hand, you are suggesting that you are right, that means assessment order is correct. And on the other hand, they want to open it. How can it be? And this was the issue which was dealt in well in 240 ITR in Adani Exports Limited case, which was accepted by the CBDT also and revenue also, and no Supreme Court reference was made in that at the time of 240 ITR. Because they cannot blow hot and cold. On the one side, they are objecting to the AG audit or internal audit. And the other side, they issue the notice that it is suggesting that there is audit objection is suggesting of the fact that there is escapement of income. So these point we have to rely by collecting information under Right to Information Act, because otherwise it is not available. So these are all practical issues, and we are dealing with the practical issues now. So we have to find out the solution from their own doings. Their own doings means their own action. That's all. Thank you.
Thank you, sir. Continuing on the same of 148, now my next question would be to Mr. Prashant Maheshwari, sir. So there's a recent controversy going on whether who can issue 148 notice, because what we are seeing is that primarily the 148 notice is being issued by the assessing officer, and then the case is being transferred to the faceless assessment procedure. So the main question, whether the notice under section 148 can actually be issued by judicial assessing officer.
See, Nirav, on this particular issue, if we just look at the interpretation which comes from section 151A, and thereafter the notification which is issued by the CBDT, it very categorically clarifies that National Faceless Assessment Center unit has to issue the 148 notice. And I think there are a couple of High Court decisions also, they have clarified that. One is from Telangana High Court and one is from Bombay High Court. Both the courts have taken the view that the notice which is issued by the jurisdictional tax officer, jurisdictional assessing officer is bad in law. So that notice 148 has to come from the National Faceless Assessment Authority only.
Thank you, Prashant ji. Now moving forward, with respect to section 68, my question would be to Mr. Mahesh Chajar, sir. So the SSC, when having income from salary income and income from other sources, an SSC does not maintain his books of accounts. The assessing officer has passed an assessment order for making an addition of rupees 20 lakhs for cash deposit into bank account. Can the AO make addition under section 68 of the Act for the cash deposited in the bank?
Basically, section 68 deals with the amount credited in the books of accounts. So means there must be books of accounts. And books of account has been defined under section 212, subsection 12A. What are the books of account? Cash book, bank book, other purchase register, stock register, whatever the regular books of account. So whether bank book or bank statement can be treated as a book of account? No, it is a book, my account with the bank is account of the banks, not my account. So it can be treated as my books of account. So bank statement is not a books of account, it is only a statement. So that was very old decision, and nowadays, so many cases, additions case are reopened and additions are made mainly, or either they invoke section 68 for deposit made in the bank account, or either 69A. So 68, when I am not maintaining books of accounts, so case of 68 would not ever arise. As far as 69 is, when I am found to be owner of money, bullion, gold, or precious metal, whether any credit entry in the books of account would be my money, bullion, or anything? No. I am not the owner of any transaction record in the bank statement which is lying with, of the bank. So neither 68 would apply nor 69A would apply. Old judgment was Baichand Gandhi, which was later on in the Delhi High Court in the case of Mayawati. where High Court has held that books, banks, any transaction recorded in the books of account cannot be treated the books of the SSC. So, bank recorded transaction in the bank statement cannot be treated as the books of account. So, no addition can be made. So, and there are so many other cases also wherein it is held that bank statement are not the books of account. So, no addition can be made under section 68.
Thank you so much, sir. Now, moving forward for the investigation part, we have with us Gyan, sir. So, my next question will be the Gyan, sir. Sir, what is an important of income tax return and income tax assessment order where investigation is carried out in case of NPA account or ASM? And as a practicing chartered accountant, what precautions are to be taken, sir?
Okay. So, Nirav, the issue with respect to how do in the forensic audit or in case of an investigation is that, as you may be aware, friends, that duplicate balance sheet and two balance sheet is very common issue. Nowadays, it is not there, but earlier, lots of businesses used to prepare one balance sheet for the purpose of income tax and other balance sheet for giving to the bankers for obtaining the loan. So the issue came, how do the lenders verify which balance sheet is correct? So they devised a method that whatever profit shown in the audited balance sheet, of course now they started checking at MCA portal. Now every loan account, wherever it is a audited case, bankers has a policy, RBI has issued a direction that the bank should invariably check whether this is the same balance sheet which has been uploaded in the MCA portal. But still, the lenders do look into the last profit as shown in audited balance sheet should be the starting point in the computation of total income, and then what are all those adjustments which has been made by the company, and whether any of such adjustment is an early warning sign. For example, I'll give an example. In one of the case, we were looking that on the basis of tax audit report, certain expenditure has been disallowed as TDS was not deducted. So naturally, in income tax return, if the TDS is not deducted, it's not an allowable deduction. But from regulator or investigation point of view, on investigation it was found that the expenditure was bogus. It was only on paper because there were no person to whom the commission had been claimed to have been paid. And as a result, expenditure was disallowed either in the competition or in the assessment order. So all those adjustments which has been made or the expenditure which has been disallowed in the computation of total income is viewed from the diversion of funds or siphoning of the funds. I'll give you one more example for the benefit of all young chartered accountant members, that in one of the case we were investigating on behalf of CBI, which is one of the loan was 24,000 crores. It was one of the large account which has turned into NPA. And we were looking into the assessment order. There was an issue wherein close to 100 crores rupees were disallowed by the AO on the basis that these purchases were found to be bogus, not genuine, on the basis of certain inquiries made by the AO under 133(6) and so forth. And finally, the company has also accepted. So this issue has been taken up by the regulator, where the money has gone. If the purchases which has been shown in the books of accounts is not genuine, only on paper, naturally, no goods has been received by the company, though where the money has been gone. So going for the trail of the funds, in the forensic audit, we had find out that the trail of the funds, find out where the money has gone, and finally it has been concluded that it is a siphoning of the funds, money has gone outside the business. So the issue which has been raised by the Nero is that for diversion of funds, for siphoning of funds, income tax return, computation of income, assessment order, or even CIT appellate order forms a valid basis to derive certain issues with respect to diversion or siphoning of the funds.
Thank you so much, sir. Moving forward, my next question would be to Mr. Prashant Maheshwari, sir. So there is one peculiar section, section 263 of the Income Tax Act, which says about the revisionary powers laid down. Sir, can you please give a brief about section 263 and who can exercise revisionary power under section 263 and what are the primary conditions for invoking the same?
See, Nirav, I think 263, the revisionary powers always vest with the principal commissioner, and as a commissioner also. So whenever they feel that the order issued by the assessing officer is erroneous and it is prejudicial to the interest of the revenue. So if these two conditions are cumulatively satisfied, that is what gives the power to the commissioner to do the revision proceedings. I'll just try to share it with a practical experience. There was a caveat in the tax audit report of the assessee that in the TDS section generally we see that kind of a caveat which generally says that because of the practical difficulty sometimes tax auditor is not able to verify the reconciliations. And there was a caveat in the tax audit report that because of the practical difficulty we have not been able to verify this particular reconciliation, TDS reconciliation, and hence this is something which was there in the tax audit report. There was a categoric question during the assessment proceedings which was asked by the AO in the course of assessment proceedings. But somehow that information was not submitted by the assessee and that assessment got closed without any adjustment. There was an observation from the commissioner that this reconciliation is not provided by you in the tax audit report. This reconciliation was asked by the assessing officer in the course of the assessment proceedings, but still that reconciliation was not provided. Still there was no adjustment in the assessment order. Okay, so how come, please explain why this assessment should not be reopened under, or revision proceeding should not be performed under section 263. Now categorically when we discuss with the commissioner, okay, we appreciate the order may be erroneous, but how come merely non-existence of this reconciliation becomes an order which is prejudicial to the interest of the revenue? Definitely, as expected, CID has taken a particular call, but these are the kind of cases which generally categorically get covered under 263. Thank you.
Thank you, Prashant sir. Moving forward to the one practical case with respect to section 263, I would like to come to the Mr. Mahesh Chajar sir. So the assessing officer has passed an assessment order under section 143 of the Act by making an addition of rupees 50 lakhs. Thereafter, the AO noticed that there was some error while passing the assessment order. So the AO has sent a report to PCIT pointing out the errors in the assessment order. On the receipt of the proposal from the AO, the PCIT has initiated proceedings under section 263 of the Act and set aside the assessment order. So the basic question is whether PCIT has assumed valid jurisdiction for the order under section 263 of the Act.
Section 263 gives powers to the PCIT to actually practical aspect is that the assessment order is passed, then whatever the assessment order passed has to be examined by the PCIT and then he has to find out whether the assessment order was passed correctly or there is erroneous. But practically, these all the commissioners do not go through all the assessment orders. But once after passing the assessment order, the AO feel that yes, there was some mistake remained by me or subsequent AO that yes, there is mistake remained in the earlier assessment order. So he makes the proposal. How we came to know the proposal that Rohit sir is clearly stated that we have to file RTI to get how CIT come to know about the escapement of income. Then this AO makes the proposal that yes, there is mistake when my assessment order was passed, and he recommend, and on the basis of the recommendation of the AO, PCIT initiate the proceeding under 263. In fact, on the basis of the recommendation, PCIT cannot reopen, initiate the proceeding under section 263. There is a direct judgment. Of the Calcutta High Court, wherein it is stated that on the basis of the CIT, principal CIT versus Rita Lakhmani, wherein it is stated that on the basis of the objection proposal sent by the AO, PCIT cannot assume the reopen 263 proceeding. Secondly, even suppose PCIT has made the provision, proceeding, initiate the proceeding, even that point of time, if SSE furnish all the documents and explain that there is no escapement or there is no errors or there is no omission, even then also the PCIT should look into the whatever the submission made by the SSE. He cannot simply state that once this was whether erroneous or not on the basis of the assessment record only. HCIT, the SSC furnished all the documents, then he has to go to it, then he has to state that yes, even after examining the whatever the document furnished before me, also this order is not valid. So for which Guwahati High Court has very categorically stated that. It was incumbent on the CIT to consider explanation offered and on that basis to record his opinion conclusion as to whether he still considered the assessment order in question to be erroneous and prejudicial to the interest of the revenue. And so then he has to proceed on that. So merely when the SSC has a chance to give all the explanation before the CIT, if he find that something is remain omitted before the assessing officer.
Thank you so much, sir. In the earlier question, we have seen the cases being forwarded to the AO to the PCIT and PCIT to the AO. So in middle of this passing the parcel, I come to my next question to the Rohit Choksi, sir. Sir, whether AO can refer to DVO for determination of valuation of property without actually rejecting the books of account of the SSC?
This issue has been put before us, and this query has been put before us only on the basis of the Brahmaputra Infrastructure Limited of Delhi Tribunal judgment. And in that case, it was, of course, for assessment year 14-15 and before. From assessment year 14-15 after, there is a specific amendment which suggests that there is no need to reject books of account. When there is a categorical provision in 142A that there is no need to reject the books of account, there is a very clear cut fine. I mean, settled provision, settled law that without rejecting books of account, the reference can be made to the departmental valuation officer or any valuation officer. Valuation officer is defined under the Wealth Tax Act as per the Wealth Tax Act, which has been now done away with from 2015 onwards. But the procedure has to be followed according to the section laid down there. So this is a very simple question, so from that point of view. But I want to put a very, very important point here, that even if books of accounts are not required to be rejected, whether some material or some opinion has to be formed by the assessing officer or not, that is a very, very, very important question. So before reference to the DBO, making reference to the DBO, the assessing officer need to have certain material information, one basis of reference, and without that, he should not, in this can be definitely taken as a point. And in many of the judgments, if we go through that, this has been upheld. In Gujarat High Court judgment also, Anand Banwarlal Radhukia, 75 taxmen, 45 taxmen, and many other Delhi High Court judgment. It has been that the assessing officer need to have some material in his possession to make a basis for making a reference to the DBO. So rejection of books of account is not necessary, but formation of some satisfaction, some material to refer is necessary. Now9most importantly, that 142A is definitely available to the assessing officer, but now 132(9)D, very, very draconian provision, is just available because of the amendment in this 2023 Finance Act, that even the authorized officer, and for him only for the purpose of the investigation, for him it is not necessary that he should have in possession certain information. So authorized officer within the 60, during the course of the search, or within the 60 days of the last authorization of that searched party, can refer the matter to the DBO. Of course, certain rules have to be prescribed, and according to those rules, he has to refer. But this is a very draconian provisions, and in the time to come, this may be utilized by the search party for, I should say, compulsorily or mandatorily forcing the SSA to confess certain material, whether it is against him or against the third party. So this is very important provision. Similarly, reference under section 55A can be also referred, can be made. The AO has jurisdiction to refer that. It is for the purpose of the capital gain computation. And many more other provisions for 50C, 56 also some reference has to be made. But for me, as of now, 142A and the other draconian provision of 132(9)D, which has been brought just a year back, are very, very important and has to be considered. So valuation officer has a very important role to play nowadays. Thank you.
Thank you, sir. So now I would like to know from the very rich and experience of Gyan sir in forensic audit. Sir, from your past experience, if any audited financial statements are found to be fraudulent in forensic audit, so what can be the reliability or credibility of the tax audit report which are being prepared on the basis of such financial statements?
So if the audited financial statement fraudulent in the sense I will put it, if there is a misstatement of information, meaning thereby something is different in the books of accounts and something is different in the audited financial statement, or if the audited financial statement is not prepared as per GAAPs or Indian accounting standard or accounting standard as applicable to the company. So it does not mean that the tax audit report is not reliable. One can ignore and reject the audited financial statement, but still the tax audit report will prevail because it is a separate piece of evidence, it is under the separate set of act, it is done by a separate chartered accountant, maybe the statutory auditor, and the statutory auditor may be tax auditor or there may be different tax auditor. So the tax audit report will still be a valid piece of evidence even in a case of to conclude, even in a case of a financial statement which has been rejected, tax audit report is still a valid piece of evidence.
Thank you, sir. Now from the experience of Mahesh Chhajar, sir, we would like to know about protective assessment, something like when an AOS passed an order in case of A and made an addition of ₹1 crore. However, AO himself isn't sure whether the income pertains to A or income pertains to B. Hence, in case of B is reopened, alleging that the addition which is made in the case of A is required to be added as a protective basis in the case of B. Whether the reopening of such assessment is permissible on a protective basis?
For 148, there must be reason to believe and there must be some evidence. Merely to a suspicion or contingency, AO cannot proceed to reopen the assessment. So, suppose he has passed the order wherein in the case of some a person and wherein he has made the assessment and he has a doubt whether correctly I have assessed or not, so I should proceed for B, wherein assessment can be made. So, AO cannot reopen on the contingency to reopen for making the protective assessment. For which Gujarat High Court is directly there. Vinod Bhai given by Rabadia, wherein High Court has clearly stated that for contingency, AO cannot assume jurisdiction for reopening of the assessment. So as far as protective assessment, he cannot do it. Even protective assessment cannot be passed earlier than substantive assessment. I am sharing the practical and live example of one of my friends sitting in this room, wherein AO made the addition of 200 crores on protective basis and there is no addition on substantive basis. So there must be addition on substantive basis first and then they can make the protective. You have to point out that this is a substantive and protective. But merely making the protective assessment in the case of addition protective basis and no substantive addition, that is also not permissible. Thank you.
Thank you, sir. So that raises my curiosity, Mr. Prashant, sir. Would you like to highlight a distinction between burden of proof and an onus of proof when it comes to section 148 of the Act? Very briefly, sir.
Well, it is quite an open-ended question. I would say the difference between burden of proof and onus of proof, if someone just want to make a lighter note, it is like lawn tennis, or it is like a cricket match. In burden of proof, you are the batsman, you have to play each and every ball. So when it comes to the assessee, if he has to prove any point, or in case of any litigation, any claimant or any person who is filing an appeal, the initial burden of proof is on the person who is making a claim. You need to justify that this particular claim is a valid claim, the documentary evidence, the authenticity of the documentary evidence, everything falls on the person who is submitting who is making a claim. Once I have given a particular evidences, I have given a particular claim, I have justified my claim, then the burden shifts on the other party. In our case, it may be assessing officer. Then if assessing officer is able to justify that this documentary evidence is not sufficient or for whatever XYZ reason, then the onus of proof again shifts back to the assessee to justify whatever the allegations are there. Just taking an example, I have submitted a particular document justifying deductibility of a particular expenditure. Tax officer raises an allegation that I am not satisfied for XYZ reason. I give a justification for XYZ reason. Thereafter, there is no buzz from the officer, but he just simply makes an addition. Then I can simply say, because I have given, if you are not convinced with particular thing, then you should have satisfied something. That is how the burden of proof and onus of. Burden of proof is something which is basically primarily on the person who is making a claim. Onus of proof is something which will keep shifting depending on the person who has justified the claim.
So my next question is to you only, sir. You have very well mentioned about section 263 of the Act. So that the second, one step forward, its second question arises, can an assessee appeal against the order passed by the commissioner under section 263? And how to deal with the order which has been passed under section 263 of the Act?
So Nirav, I think I'll just technically all of us knows that 263 orders are appealable before the tribunal. Okay. Now just understand one thing. When we actually see phase 263 proceedings, the entire onus in these proceedings is on the fact, is the order erroneous? Is the order prejudicial to the interest of the revenue? When we are dealing with this particular two issues, if these two issues are complied, CIT is rightful in doing the revision proceedings and directing the assessing officer to redo the assessment. So when we will appeal for these cases before tribunal will be focused only on dealing with these two particular issues. If we are successful, definitely department has all the right to go before the high courts and continue the litigation. One more practical aspect, what I always advise my clients is that just see the issue which is there before in the actual case. Definitely as a matter of precaution, we always file an appeal before ITAT. But if we are able to close these assessments with the assessing officer without an addition, I have practically seen many cases where though there is a 263 revision order from the commissioner, but if the case is such where he can provide a valid justification before the assessing officer, it's much better to put a full force in the course of the revision assessment proceedings which is happening because of the revision order. That gives a much better outcome. At least that closes the litigation for the assessee at that stage itself.
Thank you, Prashant, sir. So this brings me to the last question to Rohit Choksi, sir. Sir, whether providing the material on the basis of which the AO concluded that the income has escaped assessment needs to be provided to the SSE along with the notice under section 148A subclause B of the Act.
The entire procedure of 148A, which is a new procedure, was basically brought in on the statute that proper opportunity is being granted to the SSE. Now, this question has arisen only because of some High Court judgment of Madhya Pradesh is suggesting of the fact that no, it is not necessary to give the supporting documents, but only some information which is in a possession may be parted with. So the question, and then all litigations have started in many more cases. Now the basic preamble of the 148B is that it has to be a so-cause notice. So-cause, the word requires, and that is settled law, that by the Supreme Court also, that when there is a so-cause, it has to be accompanied by all relied upon documents. All relied upon documents. Now, if it is not so relied upon, then the notice may be treated as a defective or may be treated as invalid. But the High Courts of the Bombay and the Delhi High Court have come to the conclusion in many cases, and even the Rajasthan High Court in Anurag Gupta's case, Bhagwan Pai Sahani Sharma's case, and Rajasthan High Court in RK Build Creation Private Limited's case, have come to the conclusion that this so-called notice, which is based on the information which suggests that there is an escapement of income, has to be accompanied by all relied upon documents. Now, one simple instance, in the Delhi High Court, one case has come up that assessing officer issued a so-called notice that some person, some director of the other company has accepted that the SSE is a beneficiary of accommodation entry. He provided that information to the SSE, but he didn't provide the affidavits and the statements which were given by those director of that company. The High Court says, no, nothing doing, this has to be provided. This notice is not to be accepted as a valid notice. If the time is available, or if other provisions are available to the assessing officer, they can start de novo proceedings. But for the time being, this notice, which is not accompanied by relied upon documents, is not a valid notice. This is the stand. And that is the main purpose of 148A. And that proper opportunity of being heard on all aspects should be granted to the SSE. That's all.
Thank you, sir. Just a concluding remark from all the panelists, being the successful chartered accountant, a prominent chartered accountant from the city. So what would be your do's and don'ts to the young chartered accountants and the members sitting in the halls? Because what we are seeing in nowadays, may it be ED, CBI, Income Tax Department, or normal police, they catch hold a chartered accountant as a cat was. So what would be your do's and don'ts to the young chartered accountants or the experienced chartered accountant, how they can safeguard their interest? So, sir, a quick concluding remark from all the panelists.
Okay, this is a question which a young chartered accountant has to keep in mind. Of course, my life has been spent so far as concentrating on the tax provisions, income tax provisions, and dealing with the such cases, and also some corporate issues of certain big corporate of Ahmedabad and Gujarat. But I would suggest that young chartered accountant has many more activities to diversify. Income Tax Act, so far as from my bottom of the height, I should say that it has been made as good as a criminal law. I am suggesting that in income tax, there is no exit route if there are such is, or if you are caught red-handed, there is no exit route even if there is a mistake on your part or on the accountant's part. There is no exit route, and long procedure has been laid down. So many more activities are available, like I should say international tax practice, many more things to go for NCLT, SIC unit dealing with those things. And our Pipara Sahab is also in the line of forensic audit. So these are the new things which are coming up. Of course, the artificial intelligence will change all of your life. हमारी लाइफ 2004-5 में से जब से ईमेल आया तब से बदल गया. Now your life will be totally different. We cannot visualize that. The CA profession, what would be after 10 years? I should say after 10 years. Artificial intelligence will bring in it revolutionary changes in the profession and also in the things to follow for all activities, whether it is company law practice, whether it is forensic audit or forensic provisions, or whether it is dealing with all authorities. In short, all laws have been made as if the economic offense is a criminal offense. Till 2016, economic offense was not considered in most of the cases as a criminal offense. Now even small economic offense is also considered as a criminal offense. So we have to and we need to diversify with a new line of activity, our knowledge in respect of accounting, company law, management is profound, and of course we are also day in and day out proficient with the artificial intelligence provisions also. We should learn that thing. and we should go for that. In short, taxes are not value creating. Taxes are just value saving, but they are not creating new value. So this has to be kept in mind. Now there is an era of value creation and not the value of value saving. Just saving 100 crore or 200 crore will not help you to give a rise in the company. But if you go with a new idea, new things, new entrepreneurial skill, then of course it can add to the value creation. Thank you. Thank you.
So your experience.
So friends, in my view, there are lots of good opportunities available to all chartered accountant, young professionals. Institute has already given you a certificate to sign. I will put it this way, that when we started practice in 1995, there were two types of practice, either do the income tax or auditing. Then the tax audit was introduced, and there was a concept that gross profit 5% વધારી દીધો, 10% વધારી દીધો, and that was the concept. Now, the time has come where you need to be specialized in any of the one field. If you are doing auditing, not only the accounting standards, but of course of the auditing standards also you should have the knowledge. If you are practicing on income tax taxation side like Rohitbhai with the masters and pioneer and very good knowledge, you should have a thorough knowledge of income tax, what is happening, like Pramod Kumar ji said, that what is the judicial pronouncement, what is happening, what is the judicial mind, etc. And when the India is aiming for 5 trillion economy, and soon we are likely to achieve the 25 trillion economy, and someday I was hearing the Purushottam that there is going to be the need of huge chartered accountants. So there are lots of opportunities. Only point is that you need to have a thorough knowledge of whatever you are doing. Even if you are issuing a certificate, you should know that what is the issue for which you are issuing, what are the relevant auditing standards which say what precautions you need to take, what evidences you need to keep in your file, etc., etc. So, and of course, as Rohitbhai rightly said, the artificial intelligence we consider the one of the big opportunity which is yet to come in the auditing and accounting profession. It has come in various software development. They have started using ChatGPT and Llama model and various models to predict. I was Rohitbhai to share. There is a company who is going to analyze the financial statement based on artificial intelligence, and based on the preceding 6 years, the software is going to predict the next year how it will look like. What is the financial position of the company? What are the early warning signs? What are the strengths? What are the weaknesses? Analyzing the business model on the basis of artificial intelligence. Analyzing the corporate governance on the basis of artificial intelligence. So, friends, there are lots of opportunities are there ahead as compared to which were there in the earlier. This, I will put it this way. Thank you.
We have to do whatever we are doing, we have to do based not only the formalities, compliance side. There is a good opportunity for indirect tax, particularly GST, but most of the people were engaged to file the return. There are more scope in their area also, not just like direct tax, more litigations are in indirect taxes also. So one has to read carefully, one has to be very perfect in his work, what he is doing. I give a simple example, just I share with him. One of the tax audit for which I have filed appeal before tribunal, wherein there was small mistake on the part of the auditor. Their kgs 273. Actually, there was a bullion. He is in the bullion business. 273 gram was stock. He has mentioned 273 and kg was not done. So he has to mention 0.273, for which there was the addition of 90 crores. Simple error on the part because he has not thoroughly seen what he is doing, simply complying. So whatever the work we do, we have to be very careful, very punctual. That is only the way.
Prashant sir would like to conclude.
Thank you. I think all my senior colleagues have covered it quite well. I would just like to supplement some points which Rohit sir, Gyan sir and Mahesh sir has mentioned. One, I think, is that artificial intelligence is definitely revolutionary. What work we have done in the past, what done historically we have been doing as a chartered accountant, you see nowadays many of the things are getting done by artificial intelligence in fractions of seconds or in few minutes or in few hours, for which we have got trained. one basic fallacy I see with this particular model, and this is something what I'm experiencing with the young generation or young chartered accountants who enter the profession. Whenever we see at times, there are many times the responses we get is very quick. But at times from our memory, we remember that something is missed out in this because they have looked at something in the chat GPT or some other artificial intelligence engine. They have got a research done on that. That is not complete. As artificial intelligence era is growing, all the chartered accountants, all of us the professionals, we have to also upgrade ourselves where we are able to analyze and understand whether the results provided by the artificial intelligence is correct or not. I feel probably that is the biggest challenge which young generation is facing at times, that ability to identify whether the analysis is really correct or not. Because sometimes we tend to, because every one of us are in so much of time pressure at times, we are tend to blindly relying on the outputs which we get. And sometimes the ability to really analyze whether this is correct or not, sometimes it don't even click, because with the experience, sometimes we are able to make out when someone comes with a particular research, something is missed out here. That ability is something which should continue. That learning process has to continue. I think as Gyan sir just mentioned, other areas are really emerging very fast. I feel really it's a time for all of us to diversify significantly. There are a lot of opportunities available in international arbitration, international taxation. I think many of the areas which we don't explore nowadays is the mutual agreement procedures, where there is a significant amount of savings, significant amount of conveniences available for the clients. Those are the things I think which should be watched for all the young generations. Thank you.
Thank you, Prashant sir. Now it is with immense gratitude I stand before you all to propose a very heartiest vote of thanks to all the esteemed and learned panelists with us. Thank you so much, Prashant sir, Rohit sir, Gyan sir, and Mahesh sir, for taking out your valuable time and sharing your rich experience with the members at large. I'm sure with your knowledge and your experience which members have gained today, they are taking home some few points. Thank you so much, sir. Looking forward for more of your valuable insights to the members shortly. Thank you all.